what goes out. What comes in is debit, and what goes out is credit. Okay. Now I am coming to next pattern. Oh, sorry. Purchase goods from Ram rupees 10,000. Sold goods for rupees 7,000 to Rahim on credit. You see what is happening? Just changes. You please consider the changes and take the whole thing minutely, stage by stage. First of all, just listen to all the words which I am spelling out, uttering right now. First of all, whenever a transaction, there must be a transaction. So number one, you go writing the transactions please in your copy. Okay. So first, I have given you two transactions on purchase. Number one, it was purchase goods for rupees 5,000 for cash, and then sold goods for rupees 7,000 for 7,000. Now, in that case, I have tried to use the first rule. What is the first rule? The first rule is what comes in debit and what goes out credit. And we have very confidently, very confident, with due confidence, and simply we have found out the debits and credits. What are the debits? Goods are coming in, the goods account debit, cash is going out, cash is credit. And in the second transaction, it was cash was coming in. As I am selling goods, cash is coming in, cash account debit, goods are going out, goods account credit. Now come to this part. Purchase, transactions may be done, may be affected in two ways. One is cash transaction and the other one is credit transaction. Or in cash transaction, the payment is made instant. I am getting the goods and giving the money. Okay. And so whenever I am getting the goods and बोल के जा रहा है, भैया लिख के रखे बाद में देंगे. What does it mean? It is a credit transaction because the payment transaction is not completed. The payment will be made later on. It is known deferred. Transaction is present, but the payment will be made on some different date. So it is known as credit transaction. Now consider this case. Purchase goods from Ram to 10,000. Nothing is stated over here, whether it is cash transaction or credit transaction. So if the name of any person is given, it means, but say it is purchase goods from Ram on cash. What it would be? It means that I have purchased goods from Ram and paid in cash. So it will be goods account, good is coming in, goods account debit, and cash is going out. So cash account will be credit. Clear? Now think here what is happening. If no cash is written, as it is written on credit, what does it mean? So I have effected the transaction. I have bought the goods from Ram, but I have not paid him the money. I have not paid him the money. What does it mean? It is a credit transaction. Now, how would you find out the debit and credit? In finding out debit and credit, what comes in debit? It is very simple. And then what goes out? Nothing is going out right now. So there must be two wings. One wing you have got, the other wing is yet to open. How would you find it out? How would you find it out? Then come. Then take this. Use second rule. Receiver debit and giver credit. Receiver debit. So whenever any transaction takes place, you have to find out the rules and find out the debit and credit. While finding out the debit and credit, you first apply the first rule. Initially apply the first rule, what comes in and what goes out. If you get the answer of both, no tension. If you get no answer of, if both are not clear, or either is not clear, then you have the tension. So if you have the tension, please give attention to the rule number 2. What is that? The receiver is debit and giver is credit. I am taking both the example. So I am rubbing a friend, okay? So first part is rubbed. Here what I am writing, purchase goods from Ram rupees 10,000 on credit. It means I am purchasing goods from Ram. So what comes in? Very good. Number 3, goods are coming in. So goods account, goods debit. What goes out? Nothing. I am getting nothing. Clear? So take number 4, example number 4. Sold goods for rupees 7,000 to Rahim on credit. What does it mean? I have sold out. The goods have gone. Okay. So what comes in? Okay. This part is not known right now, and here this part is known. But what goes out? Goods are going out. Goods credit. Now, first rule is not sufficient to clear your problem. Okay. The first rule is not giving you the clear idea, delineation of what is credit or what is debit. And then you come by the second rule. Receiver is debit and giver is credit. Sold goods for cash rupees 7,000 to Rahim on credit. What does it mean? You are selling goods. What is going out? Goods are going out. What is coming in? Nothing is coming out. The rule 2 is telling that receiver is debit. Okay? Clear? So now Mr. Rahim is debit. Rahim is debit. Clear? And then number 1. Purchase goods from Ram for rupees 10,000 on credit. You are purchasing goods. What you are getting? You are getting goods. So goods are coming in. But what is going out? Nothing is going out. Then apply the second rule. No tension. Give attention to the second rule. And giver is credit. So here is the giver. So understood? So I think this is put your brain, keep yourself conservative and getting on this. Okay. Now I am giving the further examples. Okay. Take the example. Purchase goods from Ram. So I must be receiving cash. So number 5. Received cash from Rahim. Cash from Rahim. Received cash from Rahim rupees 7,000. I have sold goods to Rahim. Rahim, what happens? Goods are going out, goods are credit. What comes in? Nothing comes in. So receiver debit, I have told you. Okay. Now I am received cash from Rahim. What does it mean? There is how many transactions? There are how many paths? 2 paths. One is debit and the other one is credit. Received cash. What is coming in? Cash is coming in. So very, very conveniently you will write cash is credit. So sorry, cash is debit. What is going out? Nothing is going out. Okay. Apply the rule to giver credit. Okay. So giver, who is giver? Rahim. Giver Rahim credit. You see, once Rahim was debited for the sale of goods, and now Rahim is credited for the payment of goods. So the account of Rahim is neutralized. So debit and credit equals. So Rahim, Rahim owe no loan to me. Therefore, in credit, I have already told you, credit is basically a loan. Clear? So here, the answer of this received cash from Rahim rupees 7,000. That is what is coming in. Cash is coming in. Okay, cash account debit. And who is the giver? Rahim is the giver. Now again, consider this item. 6. Okay. Cash paid to Ram. Cash paid to round. This, how much? 10,000. Now just again to ask yourself, what comes in? Nothing is coming in. So there is a note of interrogation. And what is going out? When I apply the first rule, what comes in? Nothing is coming in. What goes out? Yes, I have got the second part. Cash is going out. So cash account carry. Cash debit. Now what is debit? Consider the rule 1, rule 2. What is who is the receiver? Ram is the receiver. So Ram is the receiver. Now see what happened. Once you purchase goods from Ram, Ram was credited. Now Ram is debited. So his account is neutralized. Clear? So this is these are the very important rules of debiting and crediting. Now come to the other. I am running it, okay? Now take the example. Example 7. Paid salaries. Paid salaries. Rupees 20,000. Received interest. Rupees 12,000. Now how would you? First of all, our first rule was what? I again writing down the rules, okay friend? What comes in? Debit. What goes out? Go on memorizing properly and go on applying it too simultaneously. Next. Receiver, debit. Receiver, credit. Now find out what is debit, what will be credit. Paid salaries rupees 20,000. What comes in? Nothing is coming. Okay? So let it now. What goes out? Very good. Cash is going out? No problem. Sir, मिल गया sir, मिल गया. ये कुछ नहीं मिला. लेकिन cash is going out. So you are getting one part of the answer. One part of the answer, cash is credit. But what is debit? Nothing is find out. Next, we will consider the second question. Second rule. Apply the second rule. First of all, you have used this danda for something, for making your objective fulfilled, not done properly. Now you can take another. It is also partial. Then it is what you have to take the third weapon. What is the third weapon? The third weapon is paid salaries. Have you seen salary? Nobody has seen salary. Salary is the services rendered for a particular period. Okay. Salary is the payment made to someone for the services rendered. Okay. So salary is not visible. But what you have paid? You have paid cash as salary. Okay, you have paid cash as salary. And that is the beauty, and that is the complexity, and that is the generosity of double entry system of accounting. And comes that part. So that I have paid salaries, I have paid cash. What is debit? Not found out. Receiver is not there. Although in payment of salary, when in our real life, the name of the person is also written. But here it does not matter, but for you, this is sufficient to know. Now received interest, rupees 12,000. Nobody has seen the interest, but what is it? I am getting the fund, money. I have got rupees 10, 20,000. Oh, my wallet is comparatively fat one. For what? Because I have got the interest from the banker or whatever it may be. So now what is coming in? So in that case, received interest, that is cash is received. Okay, what comes in? Cash is coming, cash is debited. Now what is going out? Nothing is going out. So who is the giver? The name of the giver is not stated over here. Then the third question is, third rule is, for what purpose? For what purpose? For what purpose? For what purpose I am giving? So I am giving salary. I am giving cash. For what? For salary. So salary is debit. Salary is debit. And here I am getting amount. I am getting the amount. For what purpose? For interest. Interest. Here. So in that way we have to solve this problem. But we are using our third method for finding out what is debit and what is credit. Here, the first rule of account, debiting and crediting, is what comes in debit and what goes out credit. In many transactions, it is very easy for you to find out both the things, but because both the things are clear and absolutely possible for you to find out by the application of this rule what comes in and what is debit, what will be credit. But when the one is absent, one part is absent, then how do you find out? Just I will give you purchase goods from Ram on credit. Okay, that means goods are coming in, goods are debit. Now what is going out? Nothing is going out at this moment. Okay, at this moment nothing is going out. Then I will approve you apply this rule. Okay, the receiver will be there, debit will be debited, and giver will be credited. Okay. Now, when there are good number of transactions when you cannot get the debit and credit by the application of these two methods, then what will you do? The third method is for what purpose? I will give you the example. Say paid wages. What it would be? Paid wages 5,000. What is going out? Cash is going out. So cash account is credited. Cash is credited. And now what is debit? Nothing is debit. What is debit? For the purpose. What is for what purpose it has gone? It has gone for the purpose of wages. So wages will be debit. Now think, you have paid interest. You have received interest. Okay, but sorry, you have done something for some friends, and he has given you some commission. So have you given any? Is there anything as commission? Looking like a black man like me. Okay. But you like beautiful guys? No, not at all. It is simply the cash is coming to me for the services I have rendered. So that service should be another component. But here, what we will say? The cash is coming in, cash account for what purpose? For the purpose of interest. For the commission. So this is the basic rules of accounting. Okay, this is the basic rule of finding out debits, and these are the basic rules of finding out debit and credit. Just you consider the step. First step should be, whenever a good number of transactions will be given to you, and you will be asked to find out the debits and credit. How do? So first of all, you should apply this rule. Rule number 1, what comes in debit and what goes out credit. And if you get both the things, thank you very much, no problem sir, I am in no tension. But tension emanates when you are getting either one. Okay, in that case, what is happening? We will follow the rules, the receiver, debit and giver credit. But again, there are some problems when you cannot get the receiver or giver, but there may be one part of the transaction, either debit or credit. In that case, we will apply the rules for what purpose. And by doing that, you can easily clear that salary is an expense, okay, and interest what I am getting is income, okay. So salary, the expense is always debit. Expense is debit and incomes are credit. Okay. Incomes are credit. As I have told you, say I am making wages, paying wages. Wages is an expense. So wages debit. Our electricity bill I am paying. Electricity bill is an expense debit, and I am getting commission. Commission is my income. So income credit. So from this we can develop expenses and losses. I will detail it in the coming classes. Will be debit and incomes and gains. Gains are clear. So these are the basic rules of debiting and crediting. And from this, we can easily derive another rule. And I will be discussing the process of finding out some, by generalizing, I will find it. The fourth rule is all assets are debited. Just go on taking it in your notes. Later on, I will go on discussing. Okay, so assets are debited and liabilities. Although these are the byproducts of this. Say you have a machine, you have purchased a machinery. I am giving you a clear distinction between the two. So think it. You are carrying on a business of exporting jute. Okay. So whenever you are purchasing jute is coming in. So jute account will be debit and cash is going out. Consider it. Take it in your mind. I am not writing. Take it in your mind, please. Whenever you are selling goods, selling that jute, what you are doing? You are getting cash and giving the jute. Just take this. I am purchasing goods, purchasing jute for rupees say 10,000, and I am selling those jute at rupees 15,000. Selling jute at 15,000. What happens? I am telling jute is debited, jute 10,000, cash credit, cash 10,000. Again, I am giving the jutes rupees 15,000 and getting the cash rupees 10,000. Clear? Now, if we neutralize the amount account, what I will see, I had 15,000, I have paid 10,000 and I have got 15,000 back. So I have got extra 5,000, right? Clear? And that 5,000 is nothing but our profit. Okay? Clear? And now again think, I have given jute of rupees 10,000 and I have given jutes, I have taken jutes of rupees 10,000, I am giving jutes of rupees 15,000. This is known as value addition, and that value addition is because of your service. And for that service, what you are doing, you are getting some extra work. Clear? And this is why we have whenever we are in trade, whenever business, we classify our assets into two parts. One is the assets which are used for our trading, and that is known as current assets. Okay, that is known as current assets. See, the man is conducting business of jutes, so he is purchasing jutes and selling jutes. It is his current assets. Now, to maintain his records, to carrying on his office, he has purchased some furniture, table, almirah, and many other. And these are his not current assets. These are known as permanent assets. Okay, these are fixed assets, and they are regarded as assets. Whenever we are purchasing that assets, we will record assets account. Clear? And these are known as current assets. When I am purchasing the current assets, then I write the term purchase. And whenever I am selling this, we write sales. And this is sales of 50,000, and this is purchase of 10,000. So sales minus purchase is equals to profit. You know it better right now. So profit is equals to sales minus cost. Clear? So it is the cost cost of purchase, it is the return from sales. It is revenue. The revenue minus cost will be equal to, that is revenue minus cost will be equal to profit. So I will, as you go on having your more study, more practice, gradually all purchase of goods, if it is given, will be noted, considered as purchase, and all sale of goods will be considered as sales. But when we purchase machinery or when we fixed assets, then it would be after the name of assets. Okay, just right now I am giving you only the glimpses of idea of that. In our next class tomorrow, I will take up 20 transactions, and I will go on analyzing the transactions for your basic understanding, and that would be the process of generalizing. So tomorrow our task will be generalizing. Okay, generalizing. Okay, so that will be our task. So thank you, friends. Any queries, any problem must be stated in your comments. Okay, please comment. If it is good, if it is serving you, make a comment. If it does not, or if you have any queries, you please let me know what are the problems you are facing. Okay. Thank you. Have a nice day.